Namaste. Having discussed the concept of debentures, now we shall go for the numerical problems in the chapter issue of debentures. Now the first problem we are going to take up is the issue of debentures for cash. A company has got the rupees 50 lakh debentures of rupees 500 each. So what we should be very careful is to note whether it is rupees 50 lakh or 50 lakh, number one. Number two, what is the face value? In the absence of any specific information, the face value of share will always be 10 rupees and the face value of debenture will always be 100 rupees. In these cases, there is a specific face value, so we should be very careful. Now the company is issuing the debentures at a premium and redeeming the debentures at a premium. And the debentures are issued in two installments, one application, two allotment. Application money is 250 rupees and the balance to be paid in allotment. Please remember, when there is a premium, premium is always excluded from the face value. So, face value plus premium. And all adjustments will be made only at the time of receipt of allotment money. Mind you, no adjustment will be made at the time of receipt of application money. All adjustments in the absence of any specific information will be done only at the time of receipt of allotment money. So, we shall be passing 4 journal entries for this question. Entry number 1 and 2 for receipt of application money and transferring the application money to debentures account, and entry number 3 and 4 will be for allotment. So, now we shall start with the journal entries, accounting entries. In the books of XII Limited. So, entry number 1, bank account debtor to 8% debenture application account. Application money received on $10,000 debentures. Please remember, it says rupees 50 lakh debentures of rupees 500 each. So please remember, it is 50 lakh debentures, rupees 50 lakh debentures, and the face value is 500 rupees. So, rupees 50 lakh divided by 500, you will get 10,000 debentures. So, on 10,000 debentures, the company is receiving application money of rupees 250 each. So, this will give you 25 lakhs. The second entry will be 8% debenture application account debit to 8% debentures account, 25 lakhs. Application money transferred to debentures account. Now, going to the third entry. Entry for making allotment due will be 8% debenture allotment account debit loss on issue of debentures account debit, loss on issue of 8% debentures account debit to 8% debentures account to premium securities premium reserve account to premium on redemption of debentures account. So, you have the remaining 250 rupees plus premium. Securities premium is 10%. Premium on redemption is also 10%. But securities premium will be received along with allotment. Premium on redemption is adjusted against loss on issue of debentures account. So, 8% debenture application and allotment will be 250 plus, please remember, 10% of 500 rupees. 10% of 500 rupees will be 50 rupees. Students generally have the tendency of remembering the face value of the debenture to be 100, which is a normal one. But these are the cases where we should be very careful about the face value, number 1. Number 2, by default we take 10% of 100 rupees to be 10 rupees. So even now we will think that 10 rupees is the premium amount. Whereas please remember, face value is 500 rupees. For which 10% has to be calculated, which is 50 rupees. So, 250 plus 50. 300 into 10,000, that gives you 30 lakh rupees. 30 lakh, then again 50 rupees into 10,000 gives you 50,000. 5 lakh rupees. Here, this will be 25 lakhs. Securities premium reserve will be 5 lakhs. And premium on redemption of debentures will be 5 lakhs. So, you have 30 lakhs plus 5 lakhs, which is equal to 25 lakhs plus 5 lakhs plus 5 lakhs. Fine. So, allotment money made due on 10,000 debentures along with premium. So the next entry, the fourth entry will be receipt of allotment money, which is bank account letter to 8% debenture allotment account. Whatever you are debiting, now we are going to credit because there is no default in payment. So, which is going to be 30 lakhs. Allotment money received. So, we are receiving 30 lakh rupees, which is 25 lakhs towards debentures and 5 lakhs towards premium. So, one concept is over. One problem for one particular concept is over. Now we are going to go to the next problem, which talks about issue of debentures for consideration other than cash. Now in this question, I have just given one hint over here. I've given you the number of debentures to be issued and the bills payable to be accepted or bank draft to be accepted, etc. But I have not given you the value of machinery that has been purchased. So, we can go only from the second journal entry working note to the first journal entry. Now, in the second journal entry, what are all to be coming? Now, let us see the purchase consideration. Now, the purchase consideration says, case 1 says 10,000 debentures at rupees 100 each plus 10% premium, which means it is 10,000 into 100 plus 10, 110, which gives you 4 zeros here plus 1 zero over there, it gives you 11 lakh rupees. Number 2 says 1,000 debentures at rupees 100 each, but at a discount of 10%. So, what happens here? The value becomes 90 rupees, which means 1,000 into 90 gives you 90,000 rupees. Plus, number 3 is about bank draft. bank draft of 37,000. So, totally we are purchasing asset worth 12 lakh 27,000. So, we should first go for purchase of asset as a first entry, then go for issue of debentures and bank draft. We should be very careful about that. So, now coming to journal entries, entry number 1 will be machinery account debit, machinery account debit to vendor account. Now, who is the vendor? Vendor is the one who is selling the asset. So, B Limited is the vendor. B India Limited. 12 lakh 27,000. Machinery purchased. So, the second entry is for the issue of 10,000 debentures at a premium of 10%. So, B India Limited account debit 11 lakhs to 8% debentures account 10 lakhs to securities premium reserve account. One lakh. 10,000 8% debentures issued at a premium. Premium of 10%. Now, the third entry will be for issue of 1,000 debentures at a discount of 10%. So, third entry, B India Limited account debit to 9% debentures account. They are issued at a discount. So, B India Limited account data, discount on issue of 9% debentures account debit to 9% debentures account. So, we will have now, this is going to be 1 lakh. This is 90,000 and 10,000 will be discount. So, this is going to be 1,000, 9% debentures issued at a discount of 10%. Then the last entry will be B India Limited account debit to bank account for 37,000. Bank draft given for the balance. We can also try to pass a compound entry for the whole thing, but my sincere advice is please do not adventure going in for passing a compound entry, because one set of debentures are issued at a premium while the other set of debentures are issued at a discount. So, you will have a discount on issue of debentures as well as securities premium with the different face values and different rates of interest. Therefore, it is advisable to go for individual journal entries for meeting out the purchase consideration. So we have completed the question number 2 where the debentures are issued for consideration other than cash. Now we shall go to the next problem. So now going to the next question, recording the debentures at different cases, redemption point of view. Now question number 1 says Mahima Limited issued 1,500 8% debentures of rupees 100 each at a discount of 10%, redeemable at a premium of 5%. So issued at a discount, redeemable at premium. So problem number 1A, entry number 1, bank account debit to 8% debenture application and allotment account. So you will have 1,500 debentures into, please remember they are issued at a discount of 10%. So the nominal value of the debenture now becomes 90 rupees. So you will get 1,35,000. Application money received at a discount. The second entry will be 8% debenture application and allotment account debit two types of entries I will pass for this, how to treat loss on issue and how to treat discount on issue and premium on redemption. So 8% debenture application and allotment account data, discount on issue of 8% debentures account debit, loss on issue of 8% debentures account debit to 8% debentures account to premium on redemption of debentures account. So you will have 1,35,000, 15,000 is 10% value, 15,000. Then 5% is loss on issue of debentures, which is 7,500. Again 8% debentures will be 1,50,000 and 7,500 will be premium on redemption of debentures. So the narration is going to be application money transferred to debentures account. Now, alternatively, for the same entry, I am just going to pass an alternative entry, or the same is going to be 8% debenture application account debit is 1,35,000. Loss on issue of debentures account debit, loss on issue of 8% debentures account debit will be 15,000 plus 7,500, 22,500 to 8% debentures account, 1,50,000 to premium on redemption of debentures account, 7,500. So same narration, application money transferred to debentures account. So the first entry is over. First case is over. So the second question, we are going to have Asha Limited issued 1,609% debentures of rupees 100 each, issued at a premium of 5% and redeemable at a premium of 10%. So the company issues at 5% premium and redeems at a premium of 10%. So case 2, journal entry 1, bank account debit will be 1,600 into 105 gives you 1,68,000 to 9% debenture application and allotment account. Application money received on 1,600 share debentures at a premium of 5%. The second entry is for transferring the application money to debentures account, 9% debenture application and allotment account debit, loss on issue of 9% debentures account debit, to 9% debentures account, to securities premium reserve account, to premium on redemption of debentures account. So we will have 1,68,000 here, then we will have 16,000 here because they are redeemed at a premium of 10%, which is a loss. 1,60,000 for debentures, 8,000 for securities premium reserve, and 16,000 for premium on redemption of debentures account. So the narration will be application money transferred to debentures account. Now going to the third case is Hima Limited issued 10,006% debentures of rupees 500 each, issued at a discount of 4%, redeemable at par. So the company is issuing it at a discount but redeeming it at a par. So it is losing at the time of issue. So now what are the journal entries for that? And here the question has a different face value. Face value of the debenture is 500 rupees. So discount of 4% on 500 rupees to be calculated. 4% of 500 rupees gives you 20 rupees. So we should be very careful about that. So case 3, you have bank account debtor to 6% debenture application and allotment account. You have 1,000 into 480 rupees because 500 rupees is the face value. It is issued at a discount of 4%. 4% of 500 is 20 rupees. So issue price is 480 rupees. 480 rupees into 1000 debentures gives you 4,80,000. Application money received on 1,000 debentures at 4% discount. So then the second one will be 6% debenture application and allotment account debit. Discount on issue of 6% debentures account debit. To 6% debentures account. 4,80,000, 20,000, 5 lakhs. Application money transferred to debentures account. Application money transferred to debentures account. So we have completed debentures issued from redemption point of view, recording the debentures from redemption point of view. Now we shall be going to the next problem. So the next question we are going to discuss about is debenture interest concept of periodic. Now I have given a question wherein the company issues 10,000 8% debentures of ₹100 each at a premium of 10%, and you are asked to pass journal entries for the issue of debentures and the payment of interest every 6 months. You are also given the tax rate at 10%. We can as well go ahead with tax payable, though it is not a part of the syllabus. So we can exempt the tax payable portion alone in the examination. But the concept to be learnt, to be known, and we know pretty well that debenture interest is a taxable payment only. So we will go ahead with the tax payment also. So tax deducted at source is given to you at 10%. So entry number 1, please remember date matters a lot. So we are going to create a date column also. So date, serial number, particulars, LF column, debit, credit. Accounting entries, in the books of Young Limited. So this is a date on 1/4/2020. We are going to pass 2 entries. Bank loan debit to 8% debenture application and allotment account. Application money received along with premium. You are given that the debentures are issued at a premium of 10%. So this is going to be 10,000 into 110. So that is going to be 11 lakhs. The second entry, same date, 1/4/2020. Second entry will be 8% debenture application and allotment account debit to 8% debentures account to securities premium reserve account. application money transferred to debentures account. So we will have here 11 lakhs, 10 lakh will go to debentures and 1 lakh will go to securities premium reserve account. Now going further, now we have completed 2 entries which are to be passed at the time of issue. Now we shall be having 2 entries on 30th September, 2 entries on 31st of March, both for payment of interest. Therefore, I am just going to pass 2 entries and with the date as 30th September and 31st of March. Please remember, from examination point of view, you have to pass separate entries on 30th September and separate entries on 31st March. Then collectively I will pass 2 more entries for payment of income tax and for charging debenture interest to statement of profit and loss. So on 30/09/2020, serial number 3, making the interest due, the rate of interest is 8%. So 8% debenture interest account debit to 8% debenture holders account to income tax payable account. Income tax payable account. Now do it as a working note. What will be the total interest? Now total value of the debenture is 10 lakh rupees, which carries 8% interest. That gives you 80,000 rupees. This has to be paid in 2 installments, 40,000 on 30th September and 40,000 on 31st December. From this we are going to subtract 10% towards income tax payable. 10% towards income tax payable. So, total debenture interest payable is 40,000 rupees, out of which 36,000 will go to the debenture holders and 4,000 rupees will go to income tax payable account. So, debenture interest made due. The second entry will be for payment of debenture interest. So, debenture holders account debit to bank account, which will be 36,000. Interest paid. Now I am just going to mark it this way. These 2 entries will be repeated on 31st March. 31st March 2021. So again on 31st March, you will pass the same journal entries with the same amount. So 3, 4 we have passed entries for interest payment on 30th September. 5, 6 will be the journal entries for payment of interest on 31st March. So 7th entry will be for income tax paid and 8th entry will be for charging debenture interest to statement of profit and loss. So entry number 7 for income tax payable account debit to bank account, tax paid, and the 8th entry will be statement of profit and loss debit to debenture interest account. Debenture interest charged to statement of profit and loss. Which will be full 80,000. Please remember, income tax payable is not included for the examination purpose. So, in case you don't have income tax in the given question, you will not have this income tax payable in the entry number 3 and 5, and entry number 7, income tax payable to bank, will not come because it will not be tested for the examination. But the concept you must know. So, this is all how we are going to treat about debenture interest. The next topic we shall be taking up will be writing off discount on issue of debentures and loss on issue of debentures. So, when the company issues debentures at a discount, we discussed that the discount account should be written off to statement of profit and loss or securities premium reserve in the same year. The year it is incurred, it should be written off. It cannot appear in the balance sheet. So, in the balance sheet, it will only be shown as a deduction from the reserves and surplus. So, in the given question, we are not given whether there is a securities premium reserve or not. So, we assume that there is securities premium reserve and we can do. Of course, we can also assume that securities premium reserve is not there. So, and we need not worry about in how many installments the debentures are going to be redeemed, etc. because discount on issue of debentures will have to be written off in the year it is incurred. So, let us not worry about the number of years in which the debentures are redeemed. To 6% debentures account. To 6% debentures account will be 5 rupees, because 5% of 100 rupees is 5 rupees into 5,000 debentures, you have 25,000. By securities premium reserve or statement of profit and loss, $25,000. So, the account will get closed automatically. And in the balance sheet, in notes to accounts, only in notes to accounts, reserves and surplus, in that securities premium reserve less discount on issue of 6% debentures. That's all. It will be shown as a deduction from securities premium reserve or any accumulated reserve which is there in the reserves and surplus. This is how we will treat discount on issue of debentures in the balance sheet, and this is how we will prepare discount on issue of debentures account. In the next question, still advanced, along with discount on issue of debentures, we will have premium on redemption of debentures also. So the title will be loss on issue of debentures account. Now in the given question, we have rupees 1 crore debentures issued at a discount of 6%. Issued at a discount of 6% and redeemable at a premium of 5%. So totally the company will be suffering a loss of 11% of the total value. I already told you, in the absence of any specific information, the face value of debenture is always 100 rupees. So rupees 1 crore debenture means totally 1 lakh debentures of rupees 100 each gives you 1 crore. Now 5% of 1 crore, 6% of 1 crore is going to give you 6 lakh rupees. 6% of 1 crore is going to give you 6 lakh rupees, and 5% of 1 crore is going to give you 5 lakh rupees. So, the company has to totally write off 11 lakh rupees. Company has to write off totally 11 lakh rupees, and the company has at present 6 lakh rupees in the securities premium reserve. So the balance will be taken from statement of profit and loss. So we are going to prepare loss on issue of 9% debentures account. Loss on issue of 9% debentures account. So you have here two 9% debentures account for the discount amount, which is 6 lakh rupees, to premium on redemption of 9% debentures account will be the loss on debentures, which is 5 lakh rupees. Now we have in securities premium reserve 6 lakhs rupees. So to say by securities premium reserve account 6 lakhs rupees, the balance will be written off to statement of profit and loss. Which will be 5 lakh. Therefore, entire 11 lakh is written off in the same year in which it is incurred. There will be no balance left in the loss on issue of debentures account. Now, in the balance sheet, in notes to accounts, securities premium reserve account, ₹6 lakhs, statement of profit and loss, ₹5 lakhs, totally 11 lakhs, less loss on issue of debentures, 11 lakhs. So, less loss on issue of debentures, 11 lakh. So, this is how it will be disclosed in the balance sheet of the company. So, what did we do? We prepared loss on issue of 9% debentures account. We ensured that we are posting 9% debentures with 6 lakhs and premium on redemption of debentures with 5 lakhs. So, total loss to be written off is 11 lakhs. The available balance in the securities premium reserve account is 6 lakhs rupees. Therefore, the balance will be adjusted against the balance available in statement of profit and loss. So, the same is disclosed in notes to accounts. Securities premium account will be shown under reserves and surplus. Under reserves and surplus, we show securities premium reserve 6 lakh rupees, and with that we add the statement of profit and loss with 5 lakh rupees to adjust the loss on issue of debentures of 11 lakh rupees. The journal entries will be the same as what you have done earlier. So the journal entry for writing of the discount on issue of debentures will be this will be loss securities premium reserve account data. Securities premium reserve account data, statement of profit and loss debit, to loss on issue of debentures account. That's all. Loss on issue adjusted to securities premium reserve and statement of profit and loss. So this is how it will be done. So we have completed the entire chapter, company accounts, issue of debentures. Namaste.